This is video number 2 in our series on the investor pitch. The topic today is the investor pitch deck. We'll literally walk through an investor pitch deck outline, an example, to talk about exactly what should go into an investor pitch deck. Hi, I'm Steve Morris, and I use this Startup SOS channel to provide practical how-to information to first-time entrepreneurs. Again, the topic today, the investor pitch deck. Now, before we go into the actual sequence of topics, let's talk about timing. I'm going to assume that you're doing a 10-minute pitch. Now, in 10 minutes, you'll be able to cover all the topics I'm going to talk about, but you'll see in the list there are actually 13 topics. Actually, the last one has 2 topics rolled into one, so really 14 topics. Now, if you're going to cover 14 topics in 10 minutes, do the math. You'll spend, on average, less than a minute on each topic. Now, clearly, some topics you'll spend a little more time on, some a little less on. But it's good to keep in mind the timing. You have to be conscious about how much time you're spending on each topic. And what you don't want to do is spend the majority of the pitch just talking about your product. Investors want to hear about more than just your product. There's a lot more to the investment opportunity than just doing a product pitch. So keep that in mind, the whole time question, as we walk through this outline. So here's topic number 1 in an investor deck. My suggestion is always start with the problem. I prefer that to starting with what some people would suggest is start by talking about what you do. I'd rather be confident that a startup's concept is based on solving a customer problem. So to me, it's more effective to start with the problem, to start with why there's an opportunity here. You need to do more than just explain what the problem is. You need to convince the investors that it is compelling. So think about the value proposition canvas. You can check that out on an earlier video if that's a new concept. Value proposition canvas talks about what's the job to be done from the customer's point of view and why is it important to get done. It's important because the customer is looking for some gain that they're just not realizing from the current solution to the problem or the job to be done, or they're trying to avoid some pain and the current solution to the job to be done isn't eliminating the pain. It's that gain they're not getting or that pain that they are getting that they don't want. That's what makes it important. That's what you need to get across when you're talking about the compelling problem. Not just what's not working right, but is it not working right in a severe enough way that the customer actually cares enough to pay for a better solution. In other words, are they missing out on a gain they really care about, or are they getting a pain that they really do want to go away? Make sure you describe the problem in a way that's compelling. That's topic number 1. Topic number 2, your solution. This is where you get to talk about your product. But remember, it's one of 13 topics, so you need to keep this very concise. You don't have to go into all the detail about how your product works. You just need to describe the essence of how you're solving the problem, the job to be done, delivering on the gain the customer needs, and dealing with the pain relief that the customer needs. If you explain that, you're good. That's topic number 2. Topic number 3, competitive differentiation. You need to explain how your solution is different, is differentiated from the competition, but differentiated in a way that the customer actually cares about. You may have differences that are trivial, that frankly the customer doesn't care about. That's not going to help. You need to make sure you get across what is differentiated and important because the customer cares about it. That typically means that it's going to help deliver that gain better or deliver the pain relief better than the competing solutions. Topic number 4, what's your sustainable advantage? Now, in topic number 3, you talked about your competitive differentiation, your competitive advantage. That usually comes down to product features, what makes you a better solution to the customer than the alternatives. But your product features are probably something that the competition can copy before very long, unless you have like ironclad patent protection. So what are your more sustainable advantages? you can build advantages that are harder to clone, harder to copy, to give you a longer term competitive advantage. Now, one example would be a patent. If you have an effective patent that really does keep competition from having all the benefits that your product does, that's a longer term sustainable advantage. Or maybe what you do is very hard to figure out how to do it and you protect it as a trade secret. That can be an advantage. Maybe you nail down a strategic customer that gives you an advantage because it gives you huge credibility in the market. Or maybe there's a key strategic partner that you nail down. Maybe it's say a distribution partner, but some partner that gives you, again, a big advantage over other competitors in the market. Those are examples of things that are more sustainable, more strategic advantages. Those are good things not only for you to think about for your business, but whatever your strategic advantages are, it's good to convey those to the investor. Advantages that are hard for the competition to copy. Question number 5. What's your business model? How will you make money? How does this business basically work? In terms of the revenue model in particular, there are a lot of different ways to make money, a lot of different ways to charge a customer. You'll need to explain very simply so that they can understand how it is that you will make money in this business. Topic 6, market size. How big is the opportunity? Now, you're talking not only about the overall size of the total market, but give the investors an idea of the segments and the focus. So, for example, maybe that's an overall size of a widget market, let's say, that's $10 billion, but you're focusing on a segment that is the mobile widget, whatever that is. That's where you have your real advantage. And because you're a startup, you're going to even focus more initially on a very specific geographical market that's maybe even smaller yet because it's just a subset of that mobile widget market. So that's a simple example of explaining what the overall market size is, but what's the market you're focusing on, your serviceable market, and then initially your first target market. Now later you'll have more targets, more segments, so that you're addressing a bigger and bigger market. But usually there's that first market that you'll be focused on, and that's a good thing to explain, and explain how big that market is. Topic 7, go-to-market plan. We talked about that first target segment. Well, that's part of your go-to-market plan. Where will you focus first? Are you going to try to address the entire huge worldwide market? In other words, you're going to try to boil the ocean and be everything to everybody. You probably sort of get the idea that I'm not suggesting that that's a good idea. Usually a startup is more successful if they focus early on. Focus on a first niche, nail that segment, and then go to the next one and the next one. After 3 or 4 or 5 years, you're addressing a big opportunity, but early on, focus is a good idea. You want to explain that in your go-to-market strategy, and explain early on how will you market, in other words, how will you create awareness and generate leads, and how will you actually sell, how will you take orders. Is this a direct sales force, or will people just order online? How will you literally collect the money? And then finally, will you make the product? If you're making a physical product, will you be manufacturing it locally? Will you start with a local manufacturer, but then as volume increases, maybe offshore it to something less expensive? What is the strategy for making the actual product? Those are the essential elements of a go-to-market plan. What's the segment focus first, and then the follow-on segments? How will you market? How will you sell? And how will you get the product made today? And down the road, 2, 3, 4 years, will that change? That's go-to-market. Topic number 8, 5-year financial projections. This is often not the favorite topic, but it's an important topic. We'll talk a little bit more about what that might look like when we talk about slide design. Topic number 9, your team. You need to talk about your team. Now, keep it brief, hit their strengths, talk about a little bit about the experience. You don't want to spend a lot of time on this slide unless it's just an amazingly successful, experienced team, in which case, frankly, this would go earlier in the presentation. But you do want to convey what the roles and what the strengths are of your team. Funding to date. Investors typically want to know how much funding have you gotten to date and how did you get that funding? Is it just savings from the founding team? Did you raise a friends and family round? Maybe you've won some grants. However you've raised funding to date, goes to show that you actually have some experience and kind of understand the challenges in raising money. So explain how much funding you have had to date and how you got it. Then, very importantly, on to topic 11, what have you accomplished with that funding? Investors really don't know what you've accomplished if you don't tell them. For all they know, you may have come up with this idea last week and just put together this fabulous slide deck, and you haven't really made any headway. So if you have made headway, tell the investors about it. Now, when we get to the reducing risk topic, we'll talk more about specific things you'll want to include in those accomplishments. Topic 12, exit strategy for the investor. An investor is investing in your startup in order to get a return, and you need to explain to them how they'll get that return. Typically, that's going to be because your company gets bought. So you'll need to do your homework. You'll need to figure out what companies out there do acquisitions in your market for companies like you. How much do they typically pay when they do an acquisition for a company that has a business model similar to yours? You'll need to do your homework to figure that out, because that's what makes your exit strategy credible, is understanding who could buy you, why they might buy you, when they might buy you, related to why, and finally, how much they might pay, which gives some inkling of an idea to the investor as to how much return there will be in this investment opportunity. So explain what you believe is the exit strategy. Again, keep in mind, it'll probably be wrong, just like your forecast, but it needs to be credible. It needs to show that you've thought through it and you've done your homework and you're thinking about the exit for the investors. Last two topics, what's your ask and what will you do with the money? On the ask side, how much money do you need, and how basically are you proposing that you raise that money? Are you doing a convertible note? Are you proposing a priced round where the investors are buying stock in your company? You're proposing some other kind of convertible security like a safe, a simple agreement for equity. How exactly are you raising the money and how much? But then very importantly, what will you accomplish with that money? And when I say what will you accomplish, a couple of important things. Number one, how much cash runway will this give you? I mean, is this money for you to go on for 9 months, a year and a half? How long will the company be able to function with that cash cushion? And number two, what key milestones will it let you accomplish? I get less excited by, well, we're going to pay for marketing and pay for engineering. Well, of course you'll do all that. But what will you accomplish? What key milestone will this investment round allow you to reach so that your company has more value and you're positioned to go get that next round, which will do something like give you enough money to really do a big marketing push to really ramp your sales. It all has to be part of a strategy. There have to be some one or two important milestones in mind that this funding round helps you accomplish. So you'll need that story, you'll need that strategy, and of course, you need to do a cash flow projection to make sure that you're asking for enough money to actually accomplish those milestones. So there's a lot wrapped up in making sure you have a credible ask. You're asking for the right amount of money, you can defend why you need that much money, and it's for a very specific purpose to reach a particular milestone so you can take that next step. Those are the 13 topics. Again, I cheated. Number 13 actually has 2. It's more like 14. But the things that I strongly recommend you include in your presentation, because these are the things that the typical investor wants to hear about. Now, if you're doing a 1-minute pitch, no, you're not going to cover all this. You'll have to pick out the key things that you want to get across. But remember the goal. The goal isn't to tell them everything. The goal is to get the next meeting. The goal is to tell a good enough story that you get enough interest that you get that next meeting. And that's it for the topics that go into an investor presentation. We'll talk about slide design next. But so far, if this has been helpful, please click that like button. If you haven't subscribed, please click the subscribe button too, so you won't miss anything in the future. And if this is useful, please share it with other entrepreneurs who might benefit. And leave a comment if you have any feedback, any questions. We'd love to read about those. And of course, be sure and check out the future videos in this investor pitch series. As they get posted, you'll see links to them here. Thanks for watching.